Nice to see all of you people on Zoom. Welcome. We are serving popcorn to the people that showed up in person. Unfortunately, the Zoom technology doesn't provide for that yet, but I'm sure that's coming somewhere down the line. But our guests today, G2 Energy, well, actually, they put out a news release today announcing a consolidation, which should increase the opportunity that is before you. And certainly part of that opportunity is with their current trading price. And I can only imagine that it's got a lot more uplift than it does downlift, considering that it's trading in the 1.5 cent range. But that really is providing an opportunity for investors. And certainly the gas and oil sector is in an opportune situation at the moment. You know, there's been world events that have started to shape that opportunity, and it's the early people that recognize that are going to profit from it. But I'll at this point I'll turn the meeting over to our guests.
Or Stefan.
Oh yes.
Oh yes,
Stefan Wagner, are you out there?
I am.
Oh, good. Have you got some comments for us on the gas and oil sector or
Yes.
energy?
Sure. So hello everybody from Switzerland, and as you may know, I run rockstoneresearch.com. I will show you the website here. And actually, I did a first report on G2 Energy, and it's available on the website as a PDF. It's actually 15 pages long, and also here as the web version. Can you see it? Yeah.
Yep.
So yeah, in this research report, I looked into the business model of G2 Energy, and I also looked at the fundamentals of the oil market. And, you know, although I'm extremely bullish on green technologies and all the companies focusing on the energy transition and those companies exploring for green metals like lithium, copper, rare earths, and also silica, I'm also very bullish for oil. Now, this may sound contradictory to you, but actually it's not. And that's because oil is the main energy we need to make the energy transition happen. And without oil, we won't be able to mine all these metals, and we won't be able to build all the electric vehicles, the solar farms, and the wind power. And we need all this to become more independent from foreign sources of energy. So it will take a long time until the energy transition is complete. And right now we are just at the very beginning of this process. And it's clearly, it's a mega trend. But at the same time, this means that it's a long-term trend that will take most probably more than a decade. And until then, oil is far from being dead, but it's being very much alive. And over the last 1 or 2 years, we saw record deployment of wind and solar power, along also with the adoption of electric vehicles. But actually, this did not decrease the demand for oil, and demand is still at a very high level. For example, the global supply chain is run on diesel, and this won't change much in this decade. And same as, for example, the agricultural sector producing food for a growing population, and this is all run on diesel. And here you can see also in this research report, you can see some forecasts. The forecast here, you can see it's on the demand for liquid fuels such as oil. And this is straight from the US Energy Information Administration, also called EIA. And here you can see that even with low economic growth here in yellow, we will see a bit more demand over the next decades than actually today. And even if we get high economic growth over the next decades, oil demand will be more than 50% higher than today. So that's a lot of oil that we need. And the question obviously is, where's all the oil going to come from? And if there's not enough oil to feed into this demand, then this will actually kill economic growth, because oil is the backbone of economic growth. And other projections like this one here on oil shows that the demand is growing from 100 million barrels per day to 110 million barrels until 2030, when demand, according to this forecast, will finally peak and then go down more or less slowly. But even in 2050, with the most optimistic forecast here we can see, we will still have more than 70 million barrels per day of oil demand, which is just about 30% less than today. So we will need a lot of oil going forward, and oil is far from being dead. It will take many decades before it dies slowly, and until then, you can make a lot of money with oil in the markets. And G2 Energy is one of such opportunities, as it looks to operate and also acquire oil wells in Texas, and then to increase the production with well workovers. And the beauty is that the production cost in the Permian Basin in Texas, where the company is active, is actually below $20 per barrel. So, and currently the oil price is about $70. And so that's $50 of profit per barrel that the company is doing. And that's a huge profit margin, and a great margin also to operate without much fear of oil price going down. And when you look at this oil chart here, the price looks like having completed its correction, which started actually in May last year. And so for the last 12 months, we have been seeing oil prices correcting from about $120 to now $70. And this is called a classical pullback after this breakout, which occurred a year earlier in May 2021. And and it looks like that these green support lines, which are actually right now being hit, they look very supportive. And if the price goes below these green lines, well, then the price might go even lower. But it looks like right now that this green support is holding strongly. And what this means is that the oil price is getting ready for a new swing to the upside, I believe. And this would mean that we are going back to the $100 level, in my opinion, and maybe even above that. So in a scenario of rising oil prices trading at the $100 level, or even at this level here right now, this will translate into outrageous profit margins for oil producers such as G2 Energy. And according to my report, the last report, the company is producing about 85 barrels per day. And at current prices, that's more than $120,000 per month in profit. So even if the gold price goes up another $30, there you increase significantly the revenues. So to sum it all up, I'm very bullish on oil at the very moment. And I think that we will enter a new bull market very soon. And moreover, as you can read in my report, the demand for oil will not shrink, but actually it will go up in the near future. And the fundamentals for the oil market are really great for the next years. And this also should support higher oil prices. And G2 Energy is really a very interesting turnaround story at the very moment. And currently it's trading at a penny. They have 92 million shares in the market. So the market cap is below $1 million. And that's really mind-blowing, considering that they are producing already and with all the plans that they have. So it's really an opportunity for investors betting on this management team to turn this company around now. And I'm actually very optimistic that G2 has the perfect management team for this turnaround they are planning to do right now. And because they have this management team really has a mind-blowing track record, you should read in the Rockstone report. And I can show you here. Here's the management team. And for example, G2's president and chief operating officer is David Whitby. And I believe he wouldn't take one of those positions at the G2 if he didn't really see the potential here for a turnaround. And he's very well known in the oil and gas industry and considered the pioneer of the Indonesian gas industry, where he had tremendous success in developing early stage greenfield gas projects for a company called Gulf Indonesia Resources. And this was owned by Gulf Canada. This was a major producer at the turn of the century. And in 2001, Conoco, today it's called ConocoPhillips, they acquired Gulf Canada for almost $7 billion in cash. And even after the takeover, David, he continued to work for Conoco as a project director in Indonesia. And before he worked in Indonesia, he grew oil production in Australia for Gulf Australia, and he increased production from 5,400 barrels of oil equivalents per day to 18,000 barrels per day in just 3 years. So he knows by heart how to grow oil production of a company. And it's also fascinating that he restructured Husky Energy's heavy oil operations, and he returned the company back to profitability by also increasing production significantly, while also reducing the production costs for this company in under 2 years. And he was also the former president and CEO of Nido Petroleum, and its share price, it increased from 1.5 cents to 62 cents in 2008. So that's almost a 40-bagger. And yeah, I mean, with his experience, it's actually 40 years in the industry, oil and gas. He gained his reputation for building companies and creating a lot of value for its shareholders. And for these major companies that I mentioned here right now, he was really relied upon to manage challenging situations and also turning around those companies. And I strongly believe that he and his team can do it also again with G2 Energy. And yeah, with Slawek, the company also has a very well-connected CEO with really good connections in Texas. And he also has about 25 years of experience in the oil and gas sector. So along with David, Slawek is really the perfect and a very tough businessman to negotiate those deals in Texas. And I believe it's the perfect team to do that, to acquire more wells, to evaluate which wells are actually worthy of investing. So I really trust this management that they will do this turnaround. Okay, that's about it from my side. I'm not going to talk too much about the company because you're going to hear it anyway now from Slawek and John.
Great, thanks, Stefan. Thanks so much. So we'll get Slawek here. I'm just going to share my screen. All right, if everybody can see that fine, Slawek, you can take it away.
Nothing up here.
Oh, nothing up here.
Across the screen.
Uh-oh.
That's the people you're waiting.
Yeah, that's okay. We have a guy in the back letting them in. What just happened here?
Turned off. Maybe Dave is it on the I think potentially.
Yeah, there we go. All right, sorry about that. Okay, you should be good to go.
Thank you so much, everyone, for coming physically here in the office as well. All the Zoom attendants. It's my pleasure to welcome everyone one more time and to give you some information about G2 Energy, which I am very happy the CEO of the company. I'm one of the founders of the company as well. So I am from the very beginning, and I was involved in the whole idea, the background to build the G2 Energy about the oil and gas. And when we first time to start talking about the oil and gas as a team, it was actually 3 years ago, and at the time it was a lot of discussion that is it good time to start. It was a lot of thinking it was maybe too early. We have a very strong feeling that the oil is going to turn around very quickly. So when we start working on the first projects, the oil was still around $40. When we secured the first transaction, it was still around 55. When we closed transaction, oil was going skyrocketing to $100. So we still, for example, even for the first transaction, we accomplished this in the good timing and to get advantage of the good price of the oil. But what's the story of the G2 Energy? Of course, first we need to have the disclaimer. That's the lawyers, what they love to put. And I'm sure everyone have time to read it. So G2 Energy and what's the real story behind. Our strategy is basically buying the cash flow. That's really our focus, is to buy a very steady, long time fields with the steady production. And that's our main focus. We want to be sure that we're buying the assets already generating the steady revenue. And this revenue, the lifetime of revenue, our target is minimum 10 to 15 years. That's the targets of the assets. We're looking for the producing assets after with the steady decline, and decline we're looking for is around 3 to 5%. So we're not looking for something which will drop the production dramatically. Again, it's steady production, and what we're willing to pay for the assets, it's maximum 24 to 36 months revenue. That's the maximum what we're willing to pay. To see the payback on the assets in not longer than 3 years. Our target is actually 2 years. That's so the first always for us is looking for the steady production, steady revenue. Second, for us important parameter is as well the opportunity to increase production by taking to doing some workover and to increase production by minimum 50%, approximately 50% in the first year after taking over buying the assets. So that's for us as well the second target. So steady production, steady cash flow, quick turnaround opportunity to increase production. And as well, the first very important factor for us is to see the opportunity in the longer term. So we would like to buy the assets. We're looking for the assets when we see the opportunity to do another drilling in the future, and in this way increase production to the next even higher level. So those three are the most important factors for us: steady production, quick turnaround to increase production, and the opportunity to increase production by the drilling program. That's what we're looking for. Our idea is to acquire minimum 2,000 barrels production, equivalent of 2,000 barrels production, which is as well important. We are focused mostly on the liquids, on the oil. Most of the assets in Texas, of course, they have as well some gas production, but we would like to keep that the gas is going to be not more than 20% of our revenue stream. Mostly, of course, for I would say pretty obvious reason that the oil is much more stable and we can see much bigger upsides on the market. The gas, it's much more difficult to deal with, so that's why we focus on the liquids. So we want to acquire 2,000 barrels production, and with the increased production by the quick turnaround as well with the drilling program, we would like to hit minimum 5,000 barrels production in 3 years from now. So that's our target, 5,000 barrels production. we would like to see, as I mentioned, minimum 60% margin. With the Texas, that's, really with the very low cost, which, Stefan already mentioned, that's really what we can accomplish pretty easy. And that's why we choose Texas. I've heard that the question many times, why Texas? Why, for example, not Canada? Because we are a Canadian company. So we choose, Permian Basin as our target area because of the very low cost of production. The field is extremely well developed, and it's very well recognized. So we're not taking almost any risk. We're buying the assets when we know what we can accomplish, what we can, what we're buying, and we know that it's a long-term production. So that's why Texas. That's why our targets are exactly like that. With the 5,000 barrels production, what that means, that's approximately $50 million EBITDA with this production. So G2 would be in completely different position than it's right now. What is as well very important, and what happened with the company in the last couple months, we did, pretty deep restructurization of the company. And as Stefan mentioned, we have very strong team. The team which you will see on the slides, it's not, of course, everyone who is involved. We have the very big, I would say, team on the ground in Texas, which are not the people you can see on our presentation, but they are really building the company. The relationship with the people in Texas is the key for us to be successful, and that's something which has been built for the many years. I'm traveling to Texas on the regular basis. I just came back this Saturday from Texas after another week over there. So we are continuously building the relation, keeping the existing relationship, because we want to be, very well recognized over there, and we want to build our reputation as the company who is, really generating steady revenue, and who is the serious partner over there for the Texas, service companies and the other, oil and gas companies. So what we did in the last couple months, we were focusing on the cutting of the cost of the overheads, and we were able to cut our overheads by almost 50%. So our monthly burn right now is all including, it's around $50,000 a month. We changed the legal team to have much better, representation, to cover, the business, and to be able to deal with the transactions in much smoother way. So we have the new legal team on the Canadian side, which is Bennett Jones, but they have as well representation in states. That's why we choose them, and they have the very great experience with dealing with the oil and gas. We changed the CFO, Gabriel, who is our new CFO. He has, long-term experience with the public companies, oil and gas industry. He's extremely focused on the building the corporate standards in all the companies he is involved. So we are very happy to see him as a CFO and the director of the company. We changing right now the accounting team behind, so we will have the new accounting team. It's happening right now. Again, it's based in Alberta. They have, long-term experience with dealing with the oil and gas, which we learned in the hard way last year, that that's a key factor, to make smoothly through the audits. We had some issues last year, but that's going to be that's solved already. We have the strong team. They know how to. They have experience dealing with the oil and gas, and they will support us on this journey. What is as well very exciting for me as well, because I was able to convince one of the very well recognized operator head to becoming the supervisor of our production. So they will be independently supervise our production in Texas, giving us the advice as well on this, how to get the most of the production, how to squeeze the last, barrel of the oil from the ground. They have very good track records of doing this in the Permian Basin. So this is the local, team on the ground, 1 hour drive from our field, and they're going to be present on the field on the regular basis. So that's for us a big accomplishment. They are very excited to join and to start working with us. That was actually accomplished when I was last week in Texas. We were building this relation for them more than 2 years, and now we were able to convince them to. They see the value and they work with G2 going forward. One more thing as well, we now realize that we, after having for almost 1 year our own assets, we are ready to start and to become our own operator, because in this last 12 months we built as well the good relationship with the local field teams. So we have now we choose the new supporting team who will work on our fields in Texas. And because of that, we now becoming our own operator, and we will have better control over existing assets, but as well about the future acquisitions, so we can in most efficient way to produce the oil and gas, and to plan the production in the most efficient way. As it was mentioned already, we just today announced that we're doing the consolidation to make this more attractive for the investors. We're doing 5-to-5 consolidation. So post consolidation, our share outstanding amount of shares is going to be around 80 million shares. And right away after that, after completing consolidation, we will announce the new financing. We're targeting 5-cent financing with the full warrant. The details going to be disclosed post consolidation, so I would say in a 1 week from now. But that's already going to happen, and we already discussed with the investors, and we have already feedback, very positive feedback, and already confirmation of a couple different groups of investors. They will participate in the financing right away. So that was what company accomplished, and I think that's really built a very strong now base for the investors, and as well the very good turning point for the company to build the value and to focus on the building buying more assets, and to building company moving to the next level. Quickly about our first acquisition. That's the Mustang unit, which is based in Permian base. It was very important acquisition for us, because that's really setting our core operation over there. The assets, why they are very important, for a couple reasons. First of all, this is original Chevron field, built by Chevron, very heavily over-engineered, which is in our case extremely important, because this infrastructure will allow us to buy more assets in the close neighborhood, take advantage of our infrastructure, and to increase production with the very low cost of the acquisitions. We are already negotiating couple acquisition in the very close neighborhood, which again, they are very attractive for us, because we can use our infrastructure to lower the cost of production, and that is impossible to accomplish for the existing owners and operators. We purchased the assets for $4 million. The reserve value, I would say bankable reserve value, is $5.6 million right now. The full PV10 value is $12 million. So when we look just on these numbers, and we keep in mind that we're trading around penny, so the market value is $1 million, I would say that is huge gap between the real value, just the assets, and the revenue we're generating right now, and before the market price. So this field right now is generating around when we purchased was around 80 barrels. We have now the program to increase the production, and that is going to happen after we complete the financing. That's the main reason for the financing, to raise the capital, to start the workover on the field right away. Short term is to bring at least 4 additional wells to production. We should get the production around 120 equivalent barrels per day going forward, and that should be supposed to be accomplished in 1 month to 2 months from after closing the financing. Especially with the new team in place on the ground, we probably can accomplish it sooner. But again, it's we don't want to overpromise. That's the target. It's oil. It's a workover on the field. So that's what we estimate. that's a couple more details, what we're going to do. So the whole cost of our workover, what we're planning to do in the maximum 3 months plan, that's approximately $195,000. That will as well include, some additional, projects we want to do to have better control over the production. So even the Chevron already implement extremely good bonds for the structure. There's still room to improve, to have, now with this technique right now, we will see the production almost online on every single phone connected with the system. So we know well by well what is the production right now, and we can monitor the production in even more efficient way. That's the part of that. Of course, another more important part is just to get back to production. 4 wells, which they are now not producing, but we already have all the study done. We have all information we necessary, we collected, and we know that we can accomplish the increase, and we should have minimum 120 barrels production in the coming months after we complete the program. That's why we call it 3 months program, because that's really the maximum time what we need to see the first revenue in our bank account from this plan. There's a couple more details someone want to know, understand. So we have, these 4 targets, 4 wells when we want to accomplish. And as you can see, it's from, 14 barrels per well, 12 barrels per well, and the well K1, which is most attractive as well, it's going to be 22 barrels of the oil production added to our production right now. What is as well very important, based on all the data, based on all the historical data, this is the production we will stay. It's not like we will hit 120 barrels and we will see the drop in the near future again. That's going to be steady production. That's going to be next level of the steady production for this field, 120 barrels. It takes some time, but that's what we really want to accomplish. So that's how it will be converted to the revenue stream. If you can see right now, that will bring us to around 350,000 a month revenue. That presentation was based on the oil $80, which we are really projecting to see the $80 or above in the next coming weeks. We will share as well with everyone who is interested in the amended presentation with the current market value, so to around $70. So if you would like to see the numbers around $70, we are happy to share the presentation with the amended value. But all the indication from the market shows that the oil supposed to be above $80 and supposed to stay at this level for the long term, really soon. So that's why we base the presentation on $80. And as you see, the gas was around $2.5 only, so it's on the lower side. That's really what is very important. This one field will generate very steady profits for the company. With this revenue stream, we can cover all the costs we have right now, and we will have the nice profits accumulating every month in our portfolio, in our bank account, which will allow us to do the more acquisition, and that's really the next step for us. We have couple targets in our agenda already, starting from the very small acquisitions around $150,000 to $200,000. As well, we're negotiating and we're talking with couple bigger projects where the acquisition around $4 million up to even $15 million. And we are now as well in the continuous discussion with a couple different financial partners to be able to complete and to target those acquisitions in the coming months. The one thing which is as well very important I want to mention is, we from almost very beginning, we established a very good relationship with the local bank in Midland, Community National Bank. I can mention the name because we signed already the agreements with them. So this bank is willing to be our local bank, and they willing to offer us the financing or refinancing of all the assets we acquire. Right now, the terms for the refinancing based on the reserve value around 65% reserve value. This is what the bank is willing to finance. What is interesting, it's the terms is like 5 years loan with 6 to 7% maximum interest. So when we will hit 120 barrels production, we actually in discussion with the bank that we want to refinance the acquisition of the cloud of the Mustang unit. This way we'll get more cash, cheaper financing, and we will have extra fund as well we want to use for the future acquisitions. So the connection in Texas, I believe we built, and it's very strong connection. We have the big network of the different people working with us on the project. And just as example, the field team who is now working with us, the principal of the field team, he's already a shareholder of the company. He realized that this is big opportunity for him to be involved, and he is already a shareholder of the company. That's really our goals. Very quickly about the team one more time. So as mentioned, I am the CEO of the company, and I'm the founder, entrepreneur by my whole life. I'm building the companies from the scratch. My focus always is about the people, and that's always the first thing I'm focused on, to build a strong team around the business. Because without a strong team, doesn't matter how good is the idea, how good is the business, we cannot accomplish anything. So that's always for me the number one, to build a team. I'm happy to work with John Costigan, who is present here as well. He's the VP of Corporate Development, many years experience with dealing with the public companies, big support for everyday operation. David Whitway, who was already mentioned, with his experience, he always shared good advice for the company, for what we're supposed to accomplish, what's the next goal. So that's a great pleasure to work with David, someone who has so many years experience. Gabriel, Queros, who I mentioned, he's the new CFO, again with his experience dealing with the big companies, big public oil and gas companies as well. That's a big accomplishment for us to have him on our board and to work together. So that's the team behind. We have as well present one name, which is one person who is not on this presentation, but I want to mention as well, our independent director who joined our board a bit more than a month ago, Markus Meyer from Germany. He is one of the largest shareholders of the company, and because we have a large group of investors from Europe, so Markus as well represents the European investors in our company, because they are now I think still majority shareholders we have from Europe. So he represents them, and he's big supporter for the company, and I'm always happy to work with him. His connections are always very important for us, and he's our voice to the shareholders and the investors in Europe. That's quickly about G2, what we accomplished so far with the first acquisition, what we are planning to do. I think it is, some people they say it is ambitious. Based on the reality in Texas, it is very possible, and it's really doable to accomplish the goals we targeting. One thing I want to mention as well, because that's one of the questions I very often hear is like, so who is selling the assets? We're buying the steady revenue. So why people selling the assets with the steady revenue? So in our case, and that's our target really is, we buying those assets mostly from the older generation of the oil and gas operators and owners. What that means, usually those are the people they are now around 70s or 80s. They missed the last opportunity to sell the assets before the last, the market correction with the oil and gas prices. And they're looking now for this, next opportunity to sell the assets. Usually the younger generation, they're not so happy to work on the field and to spend time. They are pretty wealthy and they would like to invest in something else. So very often this is the scenario. So the owners, they are pushed to sell the assets, and that's becoming the opportunity for them right now. to sell the assets, because we're targeting the pretty small assets in the size. When I mentioned about the price point, we would like to keep, our acquisitions up to $50 million, 1.5, which is not attractive for any big corporation in Texas. They start looking on the acquisitions when they have the 5 in the front, 5 million, not 5 million, $50 million or above, $100 million. That's the target of the acquisition of the big corporation in Texas. When we're looking for the small acquisition in the millions, 1 million up to $50 million, that's not a lot of competition. So that's why we are targeting this market. Small acquisitions from the older generation of the operators and the owners, which are the very now motivated to sell the assets. So thank you so much. That's what I would like to mention about and say about the G2 Energy, and I'm more than happy, of course, to answer any questions.